All right. Today's Monday, November 17th, and this is a recap for the stock market activities today. And folks, I got a good one for you tonight. I hope everybody had a great weekend and you're ready for the bloodbath that we're about to have in the market this week, because things are getting really interesting. You have the selling in cryptos. It just keeps going. It keeps going. It keeps going. No stop in sight. Then you have Nvidia's earnings. Who the hell knows what that's going to bring? Then you have the macro data that was delayed because of the government shutdown. That's going to be released too. And on top of that, we have a lot of geopolitical concerns regarding Venezuela. With all of that in hand, we're going to talk about one topic today, which is the most immediate one for us. What's going on with cryptos and specifically Bitcoin? Because we're not going to find stability in the stock market until we have stability in Bitcoin. Let's talk about it here, folks, because at the end of the day, a lot of folks bought Bitcoin on margin against their S&P holdings, against Nvidia holding, against Palantir, Tesla. There was a lot of leverage in the system. And when you have Bitcoin selling off, don't forget about all of these so-called Bitcoin wallet and treasuries, like MicroStrategy. All of these are levered assets based on debt, and they use that debt to buy Bitcoin. So when the price goes down, something has to sell to raise the margin requirement. But I'm going to keep it simple here, folks, because we can talk about leverage and show you some data and make it really, really complicated. But the headline reads, Bitcoin humbles Wall Street faithful after $600 billion plunge. So we're just losing hundreds of billions of dollars in value like it's candy. That is the definition of a bubble. But why do we see a certain asset going up or down? Look, we can talk about the fundamentals all you want. If this was a stock, for example, if it was a company, Bank of America or PepsiCo or Apple, we could talk about, revenues missed expectations or profits were under this and that, and make a case from why the stock is going down. But we know that Bitcoin has no utility, no fundamentals at all. So what moves the price at the end of the day? Buyers and sellers. It's really the balance between buyers and sellers. If you got more buyers than sellers, the price goes up. If you have more sellers than buyers, the price goes down. And by the way, it's the same thing in a stock. In Apple, for example, if you have the stock goes down if you have more sellers than buyers, but the sellers are selling based on what? Based on fundamentals, earnings, profits, revenues, competition, etc. You don't have that in Bitcoin. So the price movement in an asset like Bitcoin depends solely on the balance between buyers and sellers. And this is why over the weekend I tweeted this: the Bitcoin sphere is being exposed for being full of scammers and lowlives who keep hustling to recruit new sheep to buy the dip at absurd prices they themselves are not buying at. They just want to pump with other victims' money. It is a pyramid scheme. That's where it really is. What these hustlers are trying to do is prevent sellers from exiting, limiting the number of sellers, and recruit new buyers. And hence, you see more buyers than sellers and the price goes up. And this is why they constantly have to hustle. I mean, you don't see this kind of crap if you're talking about Bank of America, for example. Nobody comes down on social media and says, Bank of America is the best stock ever. It's going to go to the moon. Don't sell a share. Keep buying the dip. Nobody says that crap. Why? Because we know it's a company with fundamentals, with earnings, with revenues, with growth, with things you can look at and measure the price of the stock where it should be. Not in this Ponzi. This one is psychological. There's no utility for Bitcoin. There's nothing. So hence, I'll give you examples here of these hustlers. Just last month when gold topped, after a massive rally, they came out pumping, saying, it's going to be a rotation from gold to Bitcoin. I mean, you have to have your head buried deep in your ass to really believe that somebody investor in gold is going to sell gold and buy Bitcoin. And we now know what happened. Here's another one for you. The bears are cooked. JP Morgan says that the Fed will end QT next week. FOMC, CPI called tomorrow. CZ pardoned by Trump, and bullish earnings and G meeting. They just tried desperately, and at the end of the day, the price is much lower than this donkey was suggesting that it is a bullish outlook. Another example, they keep bringing charts from the past, or back in 2020, we had similar setup and Bitcoin rallied from this to that. That means we're going to do the same. Please, don't sell. And please buy. But they're not buying. It's a scam. It's a constant hustle to keep the balance between buyers and sellers positive. Here's another one. Grabs a chart, draws a line, says, they said it's over, and now we're going to bounce. Well, guess what? We've broken the trend right now. Can this guy give us an update on what he thinks right now? Here's another one. Global M2 is exploding. Bitcoin is about to go parabolic. and they outlay two charts on top of each other, as in Bitcoin always going to follow the M2 money supply. And you fast forward, Bitcoin crashed, money supply keeps going up. So now the guy's confused. We have a pro-Bitcoin president. OGs are done selling. Countries are buying. BlackRock is buying. Sailor is buying daily. Then why Bitcoin price keep falling? Because it's a Ponzi. You got more sellers than buyers. Maybe drunk Michael Saylor is buying, but there's a larger whale inside who's dumping. In other words, the big players are actually exiting Bitcoin. And this is a massive sentiment change. Here's another one. Next week will be very bullish. I will come back to this. This was November 8th. Well, it was not bullish and Bitcoin crashed since then. Another one, gold top equals Bitcoin bottom. Well, it turns out that all of this is wrong, and they give you all of these charts from 2020. Oh, gold top and Bitcoin rallied. What is the point here? Please don't sell, and whoever sees this post, buy Bitcoin. Here's Scottie Pippen, former NBA player, says Bitcoin is just the beginning. He's a pumper now, right? It's over, it's over. Well, it crashed. It crashed below the moving average, Scotty. Give us the update on what happens now. So you see, with all of these examples, it is a pyramid scheme. They constantly need to hustle to keep the balance between buyers and sellers positive toward the buyers. So we have net buyers, and whoever is holding Bitcoin is not selling. They need to maintain this scam, otherwise the price goes down. So now, let's talk about the buyers. Why are we not seeing buyers? Besides, of course, drunk Michael Saylor, why are we not seeing huge volume of buyers of Bitcoin right now? Well, for one thing, there's no utility, there's no earnings, there's no revenues, there's no sales, there's no growth. So what is the reason for somebody to buy Bitcoin right now? The answer is there is no reason. There was a reason, a psychological reason, and that was November 4th of last year, when we got the elections of Trump. Folks began buying because, oh, Trump likes crypto, he talked positively about it. Then, of course, the asset has to go up. So we see buyers stampeding to buy based on that thesis alone, that Trump likes crypto. That means it's good for Bitcoin. I got to buy right now before I miss out. Every buy thesis in Bitcoin is based on psychology and not fundamentals. And that's the problem with an asset like this, because the psychology has a time limit. After everybody who wanted to buy Bitcoin because Trump is going to be friendly to Bitcoin already in, what's next? What is the next thesis for a pump? And the other thing is, even if you think that Trump is going to be friendly to cryptos and Bitcoin, you've seen examples. You've seen what happened with the Trump coin. It was a pump and dump. You've seen what happened with the Melania coin. It was a pump and dump. You've seen what happened with Don and Eric Wolf coin. It was also another pump and dump. So now, anybody who's watching from the sidelines and maybe was thinking about buying Bitcoin because of Trump is now realizing that Trump is a scam. Before the elections, he played the crypto bros like a bunch of donkeys. He got their vote. He got his pumps in the Trump coin, and Melania coin, and Don and Eric Jr. Coin, and made billions and billions and billions of dollars. He's done. He's done. So I'm baffled when I talk to people and they say, at this point, folks who bought Bitcoin, oh, I'm not going to sell it because Trump kids like it. But the kids like it. Oh, the kids? That's your thesis now? That you're buying an asset, you don't even know what the utility of this asset is because, but the kids. The kids like it. Okay, then you deserve to lose money at this point. Once the psychological pump is over, where's the next buyer? The entire basis of Bitcoin is based on the thesis of the greater fool. And right now, it appears that we ran out of greater fools. Maybe we'll find some fools at a lower price at some point, but right now, we're not finding any. What are we finding instead? We're finding sellers. Folks who bought Bitcoin because the kids like it. And now they realize that they've underperformed everything for the year. When you look at Bitcoin year-to-date performance, Bitcoin down about 9% for the year. Now subtract the decline of the dollar, that's another 8%. So you're down about 16, 17% for the year. Add to that inflation, they say 3%, but it's actually 7 to 8%. It's used the 3% hypothetically. Now you're down 20% for the year. Meanwhile, you have silver up 62% for the year, platinum up 60% for the year, palladium up 50% plus for the year, gold up over 45% year to date, and now you're beginning to question everything. Okay, I bought it because I thought Trump is going to be good for Bitcoin. Now what? Now I watched the entirety of the year. Nothing happened with Bitcoin. I've been underperforming even gold, old school gold. Got it. This is a scam. Let me get out. And hence we see net sellers over buyers. I mean, think about this. What you're looking at right now is Bitcoin, of course, in orange, and then you have J&J, old school J&J. You have it in my portfolio, one of the top performers for the year. J&J, old school J&J, is up Over 40% year to date. Bitcoin is down about 9%. What's the point here? Bitcoin has been exposed as fraud. That's what happened in 2025. And the pumpers and the scammers can do whatever they want. You're not going to find buyers until the price goes down, number one. Or number two, you have to invent a new thesis of why the price has to go up, so you can recruit more chasers and more sheep to be the greater fool. And when we talk about the systemic risk, ladies and gentlemen, I mean, think about all of the entanglements. Bitcoin was popular among the public, so the financial institutions adopted it. We're talking about BlackRock now, having ETFs related to Bitcoin. What's happening to BlackRock? What will happen to BlackRock when Bitcoin crashes? If you said BlackRock is going to get hurt, you're right. Now, I want you to think about what's going to happen to the retirees who have all of these pension funds and retirement funds who are invested and being managed by BlackRock. You see how the dominoes fall? I mean, the AI mania aside, we have the best ingredients right now for the greatest crash in history. But I'm making moves already. I'm not just waiting and being a pussy bear like a lot of you, unfortunately, just complaining about the market, but you don't have the balls to do anything at all. I'm putting two and two together, and I'm taking action. October 29, I shorted BlackRock. A lot of folks said, Mav, you're insane. You're shorting BlackRock? You think that's going to go down? Well, since then, BlackRock went down by about 9%. And the chart looks ugly, ugly, ugly. If Bitcoin keeps going down, you will see more pain in BlackRock. I gave you an update in my short portfolio today in Discord. Last week, we've added a lot of these retail darling stocks that went insanely high for the year. We're shorting a lot of them like Bloom Energy, SDK, Lamentum, HIMS, SANM, and even Caterpillar, which is part of the AI mania now. Today, we shorted Owl Capital. We talked about the company just a few videos ago. I'm taking action. These are the laws of the jungle right here. You see an opportunity, you see a prey acting too cocky and too confident, and you have to go into predator mode and take their money. There is nothing more American than that. It's called capitalism, baby. We're capitalizing on your stupidity. Anyhow, let's add more color to this conversation by revisiting the morning brief, because we talked about certain setups right here that you need to keep in mind. I suggested that this week is being already forecasted and told with a few charts. Certain setups are saying what's going to happen to the market this week. Number one, the Dixies forming an ABC bullish breakout. What does that mean? Bearish for the market if materialized. If it plays out, that's bearish for the market. Number two, you look at bond yields. I picked the 30. Yields are forming bullish inverse in a shoulder. What does that mean? Yields going higher. Is that good for the market? Of course not, because they're going up for the wrong reasons. The Fed is not cutting and we have inflation pressure. Then we talk about the VIX forming a bullish cup and handle pattern. Is that good or bad for the stock market? That's bearish for the stock market. We talked about Bitcoin breaking down with the next support at 89,030. Is that bullish or bearish for the market? It's bearish. So you see the market opening up in the green today, or at least moving its way to trade positive, and then boom, flushing down. I said if this setup plays out, the S&P futures most important level is 6,700. Will be lost and release an inverse gamma squeeze to 6,550. But remember, we have macro data releases this week and NVIDIA's earnings, of course. This could cancel or amplify these patterns, so you gotta have conviction in your trading strategy for this week, aka balls and ovaries. Nobody's going to give that to you. You combine that with brains and you become a lethal weapon. So I added, for me, as Shakira once said, these charts don't lie. Unless I see a change in these charts and the setups that I'm looking at, I got to believe that the market is going to go down. And I'm taking action betting on that. Now, I want to address a post that captured a lot of your attention in Discord today when we did the live market chat at the closing hour. In a nutshell, I'm pointing out a major psychological mistake that traders do. For example, if a stock rallies significantly higher, they look at the chart and they feel that they've missed out and they try to time a pullback instead. Okay, missed the opportunity to the upside. Let me buy some puts, shorter dated, and hope for a sharp pullback so I can make a quickie. The problem with that is, oftentimes you'd see that the stock either consolidates or continues to move higher. Similarly, when you have momentum shift to the downside and every rip is being sold and creating lower lows, some folks miss on that move and they try to be cute and say, okay, let me buy calls for tomorrow's expiration or 0 DTE to capture a little bit of a rebound. You might get lucky and score something, but a lot of times it's not going to work out. because you're probably going to see continuation of the momentum to the downside until certain variables change. So you're better off, believe it or not, continuing to bet on the momentum, up or down, and utilize option spreads as a strategy to lower your entry cost. Because the probability of any trade being profitable, the probability of you beating the market maker, in other words, depends on the balance of the entry price and the probability of the win. Hence, spreads become really important. And I keep saying, I see a lot of traders, option traders on Discord all over the place, trading only naked options. And I say that if you're trading naked options, you're sitting in a blackjack table that doesn't allow you to split aces. And it really doesn't require any margin. You're technically going to have a margin account, but you can do that. You change the setup and they allow you to do spreads. I don't understand why traders are intimidated by all of this. Spreads are easy. They maximize your profitability goals. I'll give you an example here of what I did today. So I bought the 665 put calendar spread. I bought Friday, sold today. I paid $5.67 for the 665 puts. I received 76 cents for the 665 puts that I sold with the expiration date today. And that, of course, aids you to lower the entry cost a little bit, because $5.67, by the end of the week, I need to see the SPY, the S&P 500, at least at 660 or below for me to flip any profit. I need to lower that entry cost as much as possible. So, comes the end of the day, and now I'm looking at the price action, and I'm becoming certain that the 665 puts that I sold for today will probably expire worthless. Why is that the case? Because I'm looking at the mechanics. If you guys watch the streams, those of you in the Top Guns, and even in the regular show, if you're watching the options market coverage, I show you what? I show you the gamma exposure. I show you the volume distribution of calls and puts for the SPY. And I saw that the maximum pain is probably going to be the market maker closing above 665, not below. So what did I do next? Now I'm turning the calendar spread into a debit spread. So I sold the 659 put, the same expiration date of the 665 puts that I have, which is Friday. And I received $4.21 a piece. So again, the full entry cost from the calendar spread was $4.91. I received from the debit spread $4.21 a piece, meaning that I've managed to lower my entry cost for this trade to about 70 cents a piece. Now, there's no guarantee. For all we know, we could wake up tomorrow and the SPY is rallying higher and the trade goes bust. And I'm now losing 70 cents, not the $5 whatever that I was supposed to invest had I bought naked. But what if we have trouble, as the charts suggest, and by the end of the week, we have the SPY trading below 659. Now we managed to flip 70 cents into $6. And that's how the big money's made, folks. In options trading, you have to be really clever in reducing your entry cost relative to the probability of winning. That doesn't mean that somebody who goes way out of the money with the short expiration dates and spends 5 cents for an option trade and says, oh yeah, I'm spending less as an entry cost, but what about the probability of winning? Not a chance, because you're way out of the money with shorter expiration dates. But what if you can get closer to the money with good expiration dates relative to the price that you're betting on, and you manage to reduce that entry cost as much as possible? That's the beauty of spreads. Now, believe it or not, there is no science behind it. There's no book you can read that's going to give you that kind of skill. It's an art, and you gain that art via experience. With that being said, let's expand on this conversation and revisit the market information today, beginning with the closing of the indices, and here we go. The diamonds, your value indicator, down, losing 557.24 points, or a loss of 1.18%. So value didn't do pretty good today. What about technology? Risk on. Not so good either. The Nasdaq was down 192.51 points, so a loss of 0.48%. Now, if it wasn't for Alphabet going up because Berkshire Hathaway bought, I would say the Nasdaq could have been down about 2% for the session. The S&P Spider, it's again a technology ETF, so was down 61.70 points, or a loss of 0.92%. As I said, if it wasn't for Alphabet, if Alphabet was down 2% instead of being up 4%, we would have seen the S&P down about 2% for the day. The Russell 2000 reflecting things a little better, down about 2% for the day. And that's, again, one of your risk-on indicators. And right now it's saying there is no risk-on. If anything, we're seeing folks stampeding to the exit door outside of the risk-on trade, and they're looking for risk-off. Where do we find risk-off? We look at the sectors. Comm services at number 1 leading the pack, but that's all Alphabet. Here it is, number 2 looking for risk-off, utilities. Not the AI utilities, but the classic utilities. We'll look at the map in a minute. But you look at the laggards, financials, metals, technology, industrials, energy. Everything is down. So today was more for brutal sell-off. maybe indicating that we'll get another one and things will get a little bit extreme. We see a pop in the VIX, the put versus calls ratio expands significantly higher, and we get a bottom. We'll take it one step at a time, but for now, let's look at the market breadth. Not pretty good for the market maker. The bears won today. They crushed the market maker because the NYSE was only 14% advancing, 85% declining, meaning the market maker was squeezed to the downside. The NASDAQ 24% advancing versus 74% declining. Nice win for the bears. And here it is. You look at the heat map. Ugly, ugly, ugly. Across the board, you're seeing a sell-off in financials and chips with few exceptions in technology. You see a sell-off in energy, metals, into the industrials, and the cyclicals getting absolutely whacked. We have few exceptions. You have utilities, the classic ones like Duke Energy, NextEra, Dominion, not the AI crap. And of course, Big Pharma, which is the best long corner you can stay in for now, because of reasons we talked about numerous times. The revenue is guaranteed from the government. They're not going to cut spending on drugs and healthcare. That's a necessity. And the valuations are good, and these companies producing a lot of cash flow, and they pay dividends. So if you want to rotate to anything, the safest place to be right now is healthcare. Staples, also safe, but not acting pretty good. Why? Because we have weakness in the consumer. So it doesn't do pretty good. But again, the spending power in healthcare, specifically in Big Pharma, comes from the government. And that spending will continue to go on. And the other exception, of course, is Google, Alphabet. We know why, because Berkshire Hathaway bought, and I had my thoughts on it right here. I said the decision to buy Alphabet at the top by Berkshire Hathaway is proof that the company will lose its magic after Buffett is gone. This was not Buffett's decision, by the way. Nothing in the valuation of Google Alphabet right now fits a buy decision by the philosophy of Warren Buffett. But I think that the managers of Berkshire Hathaway, they know that they're underperforming the S&P for the year. They want to chase performance by year end, so they picked the cheapest of the AI plays, and that is Alphabet. I think it's going to backfire, and it's going to stain Berkshire Hathaway even more. Moving on to the futures, commodities, what do we see here? A little bit of a pullback here in crude oil and Brent. Of course, we're all on the edge here that something is going to happen with Venezuela, and we could see a big spike in crude, so nobody wants to sell aggressively. Nat gas, on the other hand, is down about 5%. Volatility for nat gas, that's nothing new. You look at the metals, with the dollar up, not looking pretty good here, but holding up pretty good, I would say, because you have modest losses of about 1.25% for copper, under 1% for gold, about half a percentage point for silver. And even platinum, palladium did pretty good. Platinum down about 0.7%, while palladium was actually flattish for the day. So metals are holding pretty good despite the dollar going up. What do we call that? Relative outperformance, meaning when the dollar finally goes down, you want to go ahead and buy metals, not the market. We got a good day for grains. Soybeans up about 3%, wheat up a little over 3%, almost 3.25%, oats and corn up about 1% apiece. I think a lot of the rally in grains, the recent rally is short covering, so even with the dollar going up, we see grains rebounding. You look at softs, we have declines in sugar, in cocoa, in lumber, in OJ. Only a modest rebound here for coffee, about 1%. Like I said, do not expect that coffee prices will go down, even with the tariff relief. Ain't gonna happen, because we have wider problems in the coffee business than just the tariff. Now, when it comes to sugar, cocoa, when these go down, I think Hershey's, I keep saying this all the time, but Hershey's become more attractive. Think about the recent rebound that we got in Hershey's. Moving on to the options market, the big casino, anything stands out here? Yes, the put versus call volume is increasing. We're now seeing high 30s into the 40s. I think we're getting really close here for the late comers beginning to buy puts. And that's a signal that we're about to get a rebound. I'm talking about folks who did not hedge their portfolios a week ago, 2 weeks ago. I'm talking about folks who now maybe lost some money in chasing calls and they begin to switch to puts, because the momentum is now on the side of puts. When that happens, it's usually the contrarian indicator that we're going to have a bounce. Is it good enough for a bounce right now? Yeah, it is. Upper 30s into the 40s, sure. But then you have to dissect the psychology a little bit. Will we see a lot of buying before NVIDIA's earnings? I don't think so. Maybe we'll see some short covering at the end of the day. Some folks booking profits. They don't want to be exposed to what NVIDIA is going to give. Sure, that's rational. But Who's to say that we're not going to open gapping down first and then we see short covering and dip buying in anticipation of NVIDIA's earnings? When we look at the gamma exposure, we're beyond the gamma flip. I'm looking at tomorrow's expiration and all the way to the end of the week. The gamma flip is 677.32, way below that, which means that the momentum right now is in favor of puts, bears, more downside. To what number, Mav? We look at the gamma exposure, the yellow bar, that's the highest gamma exposure for the puts. That is a 660. So again, I would say that the most bullish scenario for the market in tomorrow's session is we open gapping down the SPY 660 and then we catch a relief bounce. And that's going to be an easy trade, by the way. So we open gapping down, you close your puts, shorter dated puts that is, and you switch to some zero DTE calls, and you make a quick score. It gets complicated if we open a little bit higher, and then we begin to sell off and do the back and forth for the market maker to win, shake out everybody. That's what we don't like. We like it when the market maker lose. So I'd rather that I have a gap down and then a rebound in tomorrow's session. Let's do the unusual activities. Beginning with, well, we don't have any bullish ones for you. We have all bearish here. Let's start with the VIX. Long calls. Somebody bought the 24 calls. Right now we're trading at about 22. The expiration date is February 18, 2026. Spending about a little over $8.25 million. I agree. The VIX is not through yet. We have another massive pop coming in the VIX. And look, it could be, I'd rather see a rebound in tomorrow's session and close positive. That way we can open the path for more downside after NVIDIA's earnings on Wednesday. And then we see the VIX popping and making the move to 25. Lots of speculation right now, but the bet is that we will see the VIX advancing higher. Here's another one, really bearish for the HYG diagonal put spread. They bought the 78 puts. Right now, the HYG trading about 80. The expiration date is February 20, 2026. They're financing the 78 puts by selling the 74 puts. The beauty of spreads again. But they're choosing a lower strike, 74 puts, for a shorter expiration date, December 12, 2025. All in all, spending about $3.3 million. In other words, by the way, this is highly bearish because we know that the HYG has a great correlation with the stock market. And they're buying the 78 puts, and they're saying that it might hold all the way above 74 by December. But after December, we flush down and we begin to trade below 74. Now that comes hand in hand with some of the big bearish trades that we've talked about and covered for the expiration date of March of next year. What does that mean? A lot of traders are betting on a crash between now and the end of Q1 of 2026. Got another one for you here for RH, Restoration Hardware. This is the affluent consumer. Not bullish, somebody buying the 135 puts for the expiration date of November 28, 2025. They also bought the 125 puts for the expiration date of December 19, 2025. All in all, spending about $2.25 million. RH right now trading at about 145 a share. So they're expecting about 10 to 20 bucks worth of decline. And the last one I got for you, EWY. This is the South Korean ETF. To me, it's a sentiment indicator. And when we got the Liberation Day bottom, I made a really interesting call and I said, we got to go long Korea, EWY. And it has been the top performer among international equities since then. But recently, EWY began to top and show signs of weakness. And to me, that's a major indicator for a sentiment shift because a lot of the gambling that's happening in the U.S. market and crypto markets is coming from South Korea. And I even went as far as suggesting that the whale, crypto whale who's been dumping Bitcoin is from South Korea. So when we see a bearish bet against South Korea, EWY expecting more declines to come, what is the conclusion? Should be bearish for sentiment, bearish for momentum. And right now the EWY trading about 94 bucks. Somebody bought the 90 puts for the expiration date of Jan 16, 2026, spending about $2.25 million. Let's do the charts, and we begin with the E-mini futures 2 hours chart this time around. What are we looking at here, Mav? We're looking at a trend line of higher lows, lower highs, and we have a break. And the break is to the downside. Usually 9 times out of 10, that's bearish, and it produces a flush down. So this is what we're waiting for. Don't forget about the daily outlook when we were looking at an inverse ABC pattern. And right now, we've lost the 50 for sure, the blue line. It appears that we're going to play the C leg all the way to 6,550. So we go back to the 2. Right now, we're holding. I would love to see that overnight, we just flush down, just do it already. Get some support from we've gotten it before. And then we play a rebound trade and then wait for NVIDIA's earnings. You look at the S&P 500. Again, you see the pattern right here. That's your lower high. We haven't seen that in a long time in the S&P. See higher highs, right? This is the first time we've seen a lower high, which means that we're probably going to see a lower low. Could it be all the way down? We gap down just to 660, get it over with, and then we catch a rebound to the magnet, 666. Just when you thought you're out, they pull you back in, since we're talking about Pacino and whatnot. But this number is like a magnet right now. You see it here, you see it here, you see it here, again here, again. It's going to continue to be magnets. Sometimes in the charts, folks, I call them magic numbers. Some of you remember the Qs, 313. Now we have SPY 666. Some numbers just have that kind of magic. You look at the HYG, topping in his shoulder below the 50. I think this is a confirmation. Let's check on the weekly here and see what we're looking at. If we look at the weekly chart, bearish momentum playing out. So it appears to me that maybe the top in the market is already in. If we begin to make lower lows, so we have support a little bit here, we have support here, but if we begin to break these lower lows, higher lows, form lower lows, then that's going to be a confirmation for me that the top in the market is already behind us. What do we see in the NASDAQ? Topping in his shoulder, broke the 50. All of these are bearish confirmations. You see it already in the momentum right here. You see it in the weekly momentum beginning to show up in the MACD. Your bullish momentum that began after Liberation Day with a confirmation above the average. That's over now. Oh, beginning to shift toward a correction. You got to remember here, from positive to the zero line, that's a correction in a bullish trend. You break the zero, now you're in a bear or bearish phase, bearish trend, bear market, whatever we want to call it. What targets do I have in the NASDAQ futures? I got 24,410. That's going to be number one. And after that, we're probably going to head down if we break that, of course, because we have plenty of support right here. But if we break that, then we're probably going to head down to the next target, which is 23,251.75. Small caps, Russell 2000 IWM, risk-on indicator, inverse ABC pattern. We talked about it numerous times now throughout the coverage last week. We've lost the 50, and now what is the target? We lost 235. Next target has to be 225 if we continue to go down. I would say a failure to close above 235 in tomorrow's session means we're probably going to do it all the way down to 225. Dixie, market doesn't like it when the dollar is heading up. So we see the dollar right now not dismissing the ABC breakout possibility. And it appears that there could be a plausible outcome here. And we see the Dixie trading above the 200 days moving average. The market is not going to love any bit of that. You know who else is not going to love any bit of that? It's the old man gold. And right now, oh boy, even gold now, we have a lower high and we could be forming a lower low. And this is why I've been saying for the gold bugs and those who feel FOMO, you gotta wait. You gotta wait till we have a confirmation that the dollar is through. Absent of that, who's to say that gold is going to retest the 50, maybe break the 50 and head to make a lower low? In the meantime, if we have the dollar heading higher and bond yields heading higher, maybe crude oil would be the play, better play than gold. I'm waiting for a close above the 50 days moving average in blue. If we have that, that's about 60, 69. If we do it, I would say we have a rally all the way to 64, and crude is going to be an easier play than gold. Looking at bond yield here, the 30-year bond yield inverse in his shoulder, a little bit to the downside of the comments by Waller. But I feel that the more the Fed zombies talk, the more doubt they throw on more rate cuts, especially right now without the data. So my expectations are that bond yields are going to recover and trade above the 200 days moving average in the 30. That's bad for what? If you said home builders, you got it right. The XHB. See, if you've been watching the analysis and you took the initiative, you made big bucks today shorting the XHB. Those of you who have the $100 put options that we talked about. Now we're below the 200 days moving average. We have Home Depot tomorrow. We'll see how that's going to look like. If it doesn't look good, the Home Builders Confidence Index not looking good, we have more declines to come. So what's working, Mav? What's working in the long side? I want to buy something here. How about Duke Energy? DUK. What do we see here? You have your falling wedge breakout. You're forming a higher low, attempting for a higher high. Duke Energy looks pretty good right now. How about defense? NOC, Northrop, falling wedge about to break out. We're going to buy some shares of Northrop in tomorrow's session. I'm going to give you an update on Discord right off the gate. How about DG, Dollar General? We have a trade above the 50 days moving average. A little bit shaky, but you can argue that we have a double bottom, maybe a formation of a bull flag, and higher we go. On the not so hot so side, what about Apple? We talked about Cook today and replacement, and we have the devil, confirmation of the devil here, the top, double top. And if that is the case, then why not just move all the way to the 50, give it a retest? So we're going to stick with the same trade, 265, 260, put debit spread. You just have to roll, and extend the expiration date. And the big guy, NVIDIA, at the 50, I don't think it wants to really close below the 50 before this report, so you might see a little bit of defense for NVIDIA. If it goes below the 50 in the morning, they might save it and close above. Nobody wants to really close below the 50 in NVIDIA before this report because it's going to be a little bit premature. The souffle, we got the inverse ABC. Do we have another one? Yep, it could be. If we lose 380-ish, the low of this candle was 382.78. You lose that, you get a confirmation of the C leg. But right now, if you see another red day, then you probably want to speculate on it and initiate another trade, because this one was handsomely profitable. Whoever did this trade right here, we gave you an idea about it, 420-400, the put debit spread. You made a ton of money. And last but not least, BTC, you got your death cross right here. You see the 50s below the 200 days moving average. We zoom in so you can see it a little better. And now we're beginning to flush down. My target is, from the morning brief, 89.30. Let's see if that's going to hold, because if it doesn't, we got a big problem, folks. We might go down and trade in the 70,000s. And if that is the case, everybody who bought since the elections, because the kids, right? Well, they're going to begin to panic and sell, and then it gets really, really ugly for Bitcoin. But right now, let's see if this one's going to hold or not. And moving on to the conclusion of this video, what do we have in the economic calendar tomorrow? We're supposed to have the import price index. I don't think we're going to get it. Industrial production, capacity utilization. The government is open, but the data is not ready. But we're going to get factory orders for the month of August. Delayed, relevant, not relevant. We'll leave that for the market, but right now we're in data from August. That's not going to help me do anything. Then we have the home builders confidence index, and we have Fed zombie Governor Barr speaking. On the earnings calendar, an important indicator for the economy, Home Depot. We also have Pinduoduo, China. We have Medtronic in healthcare, Baidu and other Chinese companies, Futu, another Chinese company. So we have a bunch here to look forward to, but of course, all eyes would be Wednesday on NVIDIA. Make or break. Interesting week ahead, folks. Let's wrap it up right here. Thank you for joining me tonight. But this is all I got for you for now. Thank you for listening. Thank you for watching. I appreciate and I love all of you. I'll be talking to you again tomorrow. Good night.